Welcome to our webinar and happy holidays. Thank you for taking the time out of your busy day to join us for our last webinar for 2022. We're happy to partner again with one of our most popular speakers to bring you this webinar today on stocking stuffer option strategies for the holidays. My name is Gina Bocayas, and I'm on the management team of Regal Securities, which is the parent company of eOption and its sister company, Investrade. A few quick housekeeping matters before we start. The session today will last about 1 hour. We ask that you take a moment to locate the Q&A box on your screen. Please enter all of your questions here throughout the webinar, and our speaker will answer those at the end of his presentation. And to tell you quickly a bit about eOption, we offer you many options for your trading. You can trade stocks, exchange-traded funds, bonds, and mutual funds. And of course, as our name implies, we also offer options trading, and we enjoy teaching people how to trade them. At eOption, we offer you some of the lowest rates in the country, including zero commission on stocks and ETFs, and options are just 10 cents per contract plus $1.99 per trade. We also offer an easy-to-use trading platform as well as free trading tools to help you spot option opportunities. Our parent company, Regal Securities, has been servicing investors since 1976. Also, a recording of this video will be available on eOption's YouTube channel in the next few days, along with an extensive library of trading videos. So we encourage you to take a moment and subscribe now if you can. And if you go into the chat box on your screen, you'll see a link. And if you just click on that, that'll take you to YouTube right now. And you just click the subscribe button. It just takes a few seconds if you'd like to do that now. So before we start our presentation, I'd like to walk you through our disclaimer quickly. Options trading does have risks, and this webinar is for educational purposes only, and eOption and our speaker are not offering any recommendations or personalized investment advice. So if you can just take a moment to view this screen, and I'm going to draw your attention to the last bullet point, that options do carry a high level of risk and are not suitable for all investors. There is a booklet called Characteristics and Risks of Standardized Options, as you can see. And if you would like a copy, you can feel free to reach out to eOption, and we're happy to send that to you. And that does explain all about options, the risks, and various strategies that you can use. So I'd like to turn our attention to our speaker now, Teddy Kekstadt. He's done many webinars for us, and we'd like to welcome him back today. Teddy is a professional trader and has over 30 years of trading experience. He traded on the Chicago Board Options Exchange, Chicago Mercantile Exchange, and Chicago Board of Trade for 21 years, and has been an institutional market analyst for over 25 years. He currently serves as the president of Forex Trading Unlocked and is the author of High Probable Japanese Candlestick Patterns. He has a degree in finance from DePaul University in Chicago as well. And without further ado, I'll turn it over to Teddy Kekstadt. Thank you.
Thank you, Gina, and thank you everyone for showing up today. And I hope you're all of you are ready, all you bulls and bears out there. Merry Christmas, happy holidays to all of you, and let's get into it. All right, I already have the eOption trading platform up for you. It's live right now, showing us as the market is getting ready in front of this Fed meeting. I don't know if the market, if the number was leaked or released early. It should be done in about 10 minutes, but I know that there was already a big movement as Gina was doing the introduction. So I actually put on one spread in front of that because I knew that since we're going to be talking about different trades today, that you're probably, oh, I forgot to see if you can, let's see if you can get me. There you go. I think now maybe you can see me. All right. So once again, we got the trading platform up, and we're going to go through some potential trade setups. But because of the Fed meeting and the potential for market volatility, I decided to put on a straddle trade, and I did it in the SPY, which is an index. You can see actually right here on the trading platform, if you have it up already, where it's giving you in real time where they're at. They're right around 404.62. So I used the 404 strike price because a straddle is where you buy and sell the same strike price of a call and a put. So if you can look at the chart right here, you can see that today it's up a little bit on the day because it's a green candle, and it's floating below the highs that it made yesterday. It made a higher move high. So this market has been trending. You know that the overall stock market has been moving a little bit higher, going into this Fed meeting. And obviously, a lot of volatility is expected afterwards because we know there's a lot of media coverage about whether the Fed's going to stop raising rates. Now, these are things that you need to take into consideration for your options trading going into 2023 and setting up for the end of the year also. The consensus of the speak from Chairman Powell this afternoon after this webinar will be important to pay attention to. I would assume that they're going to continue to be on the fighting inflation stance, and that they will be reducing the rate at which they raise rates, but I would not say that raising rates is out of the question for definitely the next, I would say, 1 to 2 meetings, at least a half a point more after today, depending on what they do. And I believe a half a point is probably, which is factored into the market, it's probably what we can expect to see. So the SPY here, you can see that we have a couple indicators here, even though the market's been trending, making higher move highs and higher move lows, which that means currently it is in an uptrend. So it has a bullish bias. We have a little indicator here called the MACD that right now was showing a little bit of weakness going into the last couple of sessions, but after yesterday's new high, it's trying to like show a little bit of strength. And we're also above the 200 and the 50-day moving averages. Now that's kind of important when it comes to especially a lot of equities for setting where your trend is. If you're above those averages, it's typically bullish by the street, which means a lot of the funds will be geared towards that way, and conversely when it goes below it. So to show you what we did for this trade, here's the SPY on our account summary page, and we're going to show you how you put this on. So if you go to the trading tab here, and it should pull it up in just a second. There we go. Okay, so if we were to put this trade on again to execute it, you can see that we have buy to open, okay, on for both options. We have a quantity of 1, because we're going to be buying 1 option, 1 call, and 1 put at the same strike price, which in this case is 404, which the market's trading just above 404 even right now. So this is pretty much at the money. It's a little bit in the money for the call and a little bit out of the money for the put. So you can see the pricing here. It shows the strike price is 404, and it shows 1 call, 1 put, and then it gives you the bid and ask, and it shows you the price. So now it shows you a 1004 debit. So remember, everything is times 10. So if we're going to show you how to execute this, we'll put on 1 more, and it shows you verify the trade. Once again, it's a buy to open 1 contract of each option, the SPY. And I put it out just towards the end of December for expiration, because this is just a trade for the Fed meeting. And we'll see, we may even take it off at the end of the day. So we'll push the trade button here, and then you can see that this gives you your whole breakdown for the cost of the trade, which is a net total of just over $1,000 at $1,069.32. Click OK. And then we go back to our account summary, and now you can see that we have a quantity of 2. So we've averaged in 2 different spreads together. All right, so that's a straddle. Now, why would I put the straddle on for the SPY? Well, because we have a big news event. So that means we don't know if the market's going to go up or if it's going to go down. We know that the media right now is really leaning towards predicting what's going to happen, that they're going to stop raising rates in the early part of next year. Let's see what happens after they raise the rate and what kind of speak we hear. Let's say that they do start to say that they're going to ease off on raising rates. Well, then that all of a sudden means that you're probably going to see some very strong market activity. Is it necessarily bullish or bearish the stock market? I'm not going to call that one right now, but I would expect that you're going to see some volatility, especially because if they stop raising rates, then it makes stocks become more attractive, because they know that the bond market is only, the yields are not going to be impressive anymore, because there's been a nice little jump as far as what you can do with the yields because of the moves from the interest rate market. All right, so now let's take a look at a stock instead of just an index. So remember, this was the SPY that we looked at, and we'll see what happens at, we still have another 5 more minutes. The number should be coming out. Let's see what kind of volatility happens later on in the webinar. All right, so from the daily outlook, I was looking at some information here. So when you have the e-option trading platform put up, this is a great place to start every day. You should always see where the broad markets are at. It doesn't matter whether you're trading stocks, options, or a combination of the two or other multiple markets. having a good idea of where the broad market is a great idea to know where you're getting in. So that's very important. As you can see, this shows the futures for the Dow, the S&P, and the NASDAQ. All of them are down slightly right now, not too much. And then we have here market closing prices for the indexes, and then you have an economic calendar. That's very important too. There's certain days like yesterday, for instance, when the CPI came out, if you weren't aware of that and you were trading, whether it's stocks, options, or derivatives, that could have been a very costly day for you. Whether you may have adjusted your position differently had you known that the number came out, because it actually caused the market to have a really big knee-jerk reaction, especially in equities. So when you think that these economic numbers, sometimes people think that they only affect the derivatives markets, like interest rates and other things like that. Well, that's not so. They definitely impact the equity markets, especially the broad indexes. And those indexes, depending on where your stock is, whether it's a NASDAQ stock or an S&P 500 or even a Dow stock, which is a much smaller index, these are things you want to pay attention to when you're trading those particular instruments. Okay, so we have an earnings calendar and some other things. So I toggled down and I was looking at Delta Airlines. So now here's the thing, is we know that people are coming back. We're almost at these pre-pandemic levels for travel heading into the holidays. And a lot of people planning trips for the new year in 2023 because everything's opened up. So let's take a look at what's going on with that. We'll put our option chain here, because once we get to see if the stock is worth looking at trading, we'll see what the options are at. All right, so we're going to change this SPY to DAL in the chart and see what we got here. Okay, so for Dallas right now, we have pretty much a neutral trading environment, and made a higher move high a couple sessions back here, made a higher move low yesterday, and now it's kind of going sideways. Now it's trading right on this 200-day moving average, pretty flat line. So I don't really like that one. So let's go back to the option daily outlook. We'll show down to here. And then I think we had Toro Company, which raised quarterly dividends. Now that's something that's big, especially remember how we're talking about if the broad market perceives that yields are going to stop going up. Well, where are you going to put your cash? Well, you're going to look at something like TTC. If you think the stock is going to stay at least remotely stable, you're going to be looking to make 13% on your money over the course of a year. So let's take a look at TTC and see if we can figure out either a call or a put scenario. Okay, well, here we go. We have TTC. So now for all you bulls out there and bears, here's some interesting things. We have the market is obviously trending. It's making higher move highs and higher move lows. It's trading nicely above the 50-day moving average, which is your shorter term. And then we have your longer term 200-day moving average, which is also above. And then we have this MACD oscillator where it had been, see how it was going sideways here, and you had this red zone here. It was overbought the way the indicator was looking, but now it's coming out of that. And also you have this indicator turning. So this means we have a really bullish signal for TTC. Now, how far can it go? I don't know. We're not trying to figure that one out right now. We're just trying to figure out a trade for Fed Day. So for a strike price on here, let's look up TTC. Okay, so we go to our options chains, and we're going to pull up here under the symbol TTC, and we hit enter, and that's going to put things out. Now there's a 2-day out expiration. We're obviously not looking for Friday's expiration. So we're going to go to 37 days out. Because remember, the SPY trade, when I put that out, that's only for a Fed trade. So I'll be taking those off at the end of the session, win or lose. That was a volatility play. And that's something you want to do. Like when you look at different option strategies, we have buying calls it's the same as being long a stock. You buy a put, it's the same as being short the stock. Then you're picking a direction. For the SPY, it's like, all I know is it's a Fed day. They're going to do something. The media is all hyped on one edge. Let's see if they get what they want, because if they do, whether they do or they don't, it should be volatile. It should have a nice bit of market movement. All right, so let's go to the January options here. And go to regular, strike range, all. There we go. Okay. So we had, what was it? We're trading right around 414. So I would say, oops, I'm sorry, 114. So let's look. We have a 115 strike price here. Okay, so these options, the bid and the ask, we're looking at 290 and 2, so 290, $200. These are actually not priced too bad here. So let's take a look at our trading section here. So now we're going to change this to TTC. So now remember, there's a really good earnings outlook. Also, stock market's looking somewhat bullish right now. So as far as the bullish train, then you want to add an option. So to be a bull, we're going to buy to open, and the quantity is going to be 1. We have our expiration. We're going to use the January expiration. And then we're going to use a strike price of 115. And then we're going to buy the call. Now, the nice thing about this is the market's a little bit below 114. Okay, so now the high today was 115.57. So it poked its head just a little bit above it. The question is it going to explode to the upside? Who knows? But as far as buying this right now, if you were to buy this stock, it would cost you, you got 114, 37.28. You're looking at $1,140 some dollars and change to buy 100 shares to get long this stock. I would say going into this with the Fed meeting today and ending of the quarter, going into January to see about how things are going to shore up. You have this outlook of yields once again slowing down their pace at going up, making stocks more attractive. This is one once again with the news like the dividend. That dividend percentage right now is very, very nice. If that can maintain that kind of number, that's very attractive as far as on a fundamental basis, not a technical basis. Like right now, we looked at the technicals with the chart. Fundamentally, if the accounting is true on that, once again, double check this, because I don't want to sell you on something. Obviously, this is not, we're not going to make a trade here, but if you're breaking down a trade, this is what you look at. So once again, we look at TTC as raised quarterly dividend by 13%. 13% raise on a quarter is a big deal when right now, who else is doing that? Okay, so that's outpacing technically inflation if you go by, if you believe the numbers. All right, so go back to the trading here, and for a 115 call to purchase this one, it is at a 580 ask. Remember, it was going to cost $1,100 and some dollars to take the risk of owning the stock. Of course, you do have the dividend potential if you hold it long enough. But this is a trade we're looking for an end of year, good buying stock that people are going to start to look at. Because of that dividend yield, I think fundamentally and technically, you got a good one here. So we're going to put that one up, verify it. So the estimated cost is $430. We have the other breakdowns for the commissions. We hit the trade button. We hit OK, and shabam, we should have that all taken care of. And now that should be in our account summary. Okay, so we do have it. So remember, we have our SPY where we have a put and a call, two of each. So that's 2 spreads on, those are straddles. And then we just bought a call for TTC, which is the Toro company. And once again, we did that because our outlook for the stock market is bullish short term going into the end of the year. Our chart technically for the stock is bullish. And then the fundamental information for the company is very bullish as well because of the yield. Remember that right now, especially investors in a shaky market, even if it doesn't go into a bear market, we have all these recession fears. People are going to look at stable stocks, dividend payers, stocks that have the potential to give them a high yield. That's where they're going to be chasing those kinds of in those sorts of stocks and other types of investments, because where else are you going to go right now? The interest rate differential is something that's getting, you're being pushed by the media in one way, but the Fed, as transparent as they are, which I have to say that they said they were going to be aggressive with rates this year. You know what? They didn't lie. They didn't hide behind that at all. Also, they haven't said that they're going to put their foot up, that they're going to stop raising rates. They just said they're going to deal with ease in the sense that they're not going to be going at the same pace that they have, because it's been very aggressive. Remember, before they were perhaps, one could say, behind the curve. They don't want to be behind the curve still. If anything, they want to get in front of it. So, and that's what I think you should take into account. So with those things are true, we're going to have nice volatility, which also helps to keep the price of these options up. Remember that volatility is a part of your pricing. Now, with the call, that's a good thing, because if volatility remains high and the market only goes slightly higher, you're going to maintain your a lot of value and have potential to profit off of this. As far as with the spread, volatility is it's a give and take thing, because it goes on both sides of the options on that one, so it kind of neutralizes. So for TTC, we just put on that call trade, and as far as an upside potential with this one, remember we have 1 month to go. So we'll look at the weekly. You can see it's made weekly highs. It's trending right below multi-month highs from last April. I would say that if you get this market up to 120, somewhere above there, making new highs, that will be the area where you'd probably want to get out. First of all, you'd have $500 of premium in there, plus whatever time is left in volatility. Remember that you paid for this option. What was it? It was the value here is $395. I think it was just over $430 for the option. So you would be getting more than your money back. In fact, if with the 500, if you have a couple of weeks left in the volatility, you probably be making, I would say, upwards of 50% to 60% on your money within a period of a month with a $5 move, which it has the potential to do. Let me see. I think we have some questions. Just want to make sure. Okay, yes, half point announced was, so it was done early. Okay, and if you guys have any questions about any stocks you'd like to evaluate during this session too, be sure to just put it on the question and answer thing, and we can try and take a look at those as well. All right, so now we've looked at an index, and we've also looked at one stock right now. Now let's take a look at another stock. We're going to go back to a tried and true. Let's look at good old Coca-Cola. Coca-Cola, we know that we're coming into the holidays. Parties are coming back. Heard it on the radio that what was it? People who like chocolate, they said the demand is up so high, and I guess the supplies are so good that there should actually be not a shortage of chocolate this season, but also prices should be pretty decent. Okay, all right, we do have some people. Okay, forget Coca-Cola. Let's go to TOL. Toll Brothers. It's pretty funny you mentioned Toll Brothers. I do a Wednesday financial spot, and this is one that was mentioned before my segment today. Toll Brothers, very good. Okay, so Toll Brothers had been flirting with the 250-day moving average over the past few sessions, and now it has breached those levels and rallied above them, making new highs on the day, also making a higher move high here. If you look at this Toll Brothers is a very positive indication that you're going to see a higher trending market, at least for, I would say, the next couple of weeks, most likely, as long as nothing changes. Okay, so if you look at where we're at here, this is today's trading. We breached this previous high. We've been trading lower, making lower move lows, lower move highs. We came down here. We made this as a lower move low here and a higher move high. So does that mean that we have a bullish change in trend? Not necessarily. It could just be a neutral setup that we're coming into, or just a nice extended correction before the bear trend resumes. This could be a good straddle situation, or this could be a good long situation. As far as with the averages, especially how it had flattened out, you could say that this market most likely has been basing on a trend basis also, as far as the resistance that had been keeping this trend intact, if you will. It's been breached. So if you look at how this rounded out, stabilized over the past couple of months, and we're above the average, I would say that for TOL, this is for one of our participants here watching today, this is a very bullish situation here. We also have the MACD that when you have the crossovers, now if you had the MACD above the oscillators here, it wouldn't necessarily mean that it's not a buy signal. But right when it's below here, especially when this oscillator starts to turn green ahead of this like this, where we bottom, this is a good indication that we've turned a point, at least in the short term, and have a good chance at a correction. We also have what is called divergence here. Now, divergence, if you'll give me 1 second, and this is going to set us up for the options. This is a really good question from our one listener here. So if you look at this little low here, and this little low over here. Okay, now they're not much lower. However, this one is lower. Then if you look at where the MACD crosses here, we have, this is where you have the buy signal here. And then we have this one that just occurred right here after this. So bear with me because this is a good technical analysis. Then we'll get to the fundamental and then we'll find the option trade for you here. All right, so here was the low on that day. And here was the low on that day. At this time, both these lows were below the moving averages. You had a crossover oversold indication here. As you can see, the market did retrace a little bit, but then it trended lower. It set a lower move low. So this was already a little bit, that's where you gotta be careful with your indicators and know how to use them. Now, divergence is a very good indicator of when you will see a turn. This is where you have, here's a lower move low, and then we have a lower move low here. But on the indicator, this buy signal was much lower than here. So that's divergence. If you look at the line, this visually will make sense to you when I put this up. So if we put the arrow from this low to this low, you can see that this is trending down like this. And if we put this into here, this is trending up. So that shouldn't be happening. If the market's been trending lower and you're looking for a buy signal, it's oversold, that should be really buried and lower. The fact that this is higher and the market went lower, that's called divergence, which gives us a buy signal. And let's take a look at that. So for Toll Brothers, we're right around the $50 level. Let's pull up the options on trading. So for TOL, let's see what the pricing is on this one. So we're going to add an option, buy to open, quantity 1, expiration. We're going to go with the January. We're going to spread it out to January 13th, go for a little bit longer expiration. And what did I say that was? It was 50, right just above $50. So $50. And let's look at the call price here. All right, look at this now. This is a nice little buy here for Toll. If you were to buy the stock, now think about this. If you're bullish, and this is good for all of you viewers and the one who asked the question here, we have a very good indication in the short run that this market is poised to keep on trending higher. How high? Well, that's a whole nother story. We can look at that in another second. But as far as being bullish, you can get it pretty much at the money. There's a $50 strike price that if you were to buy the stock at $50, you know, times 100, you're looking at $5,000. Versus we go to the option here for the next month and a half, play the short-term rally, and you can buy this for $272. And we execute that one, and that gives us until January 13th. Let's see if we did the right thing. We go back to our account summary. We have our Toll call right in there, and we can see that it is entered right there below our Toro. So let's go back to the Toll. So we know that on January 13th is expiration. I'm going to walk you through how to manage this would-be hypothetical trade here. So we go to January. Oh, got to go back to the daily here. Okay, so we had the weekly there for that divergence, and then we have the daily here. And I'm going to have to go back to the weekly just because. There we go. December 12th, January 9th, 17th. Okay, so 17th, this is the Monday of the following day. I got the weekly chart up so you can see this. Okay, so we have still a few weeks to go. We have 4 weeks to go in the trade in the market. We just bought a $50 strike price. So we put this at 50. So you can visually see what's going on here. Okay, so this green line here, and I can get rid of this distracting stuff. Okay, so this green line here represents our strike price at $50. The market was trading just above it, and we know that how much we just paid for the option. Okay, we just paid a little over, just under $300 for the option, $270. So what kind of move do we need? Well, at expiration, we definitely need it to be at least 52.70. That would be cover, it would be a break-even point for being positive, but in the money, and being an option that expires profitable. That would at least, or excuse me, not profitable, that would be break even. So we go to 52.70. We'll make this one yellow. This has to be our So we don't have much for the market to go. It basically has to go take out the highs from today, and you could be generating a profit on this. You would be losing a little bit of time. There's not much time value left because there's only a few weeks left. So that decays very rapidly. But volatility is supposed to be pretty high also for the next couple of weeks, which might help to balance that out a little bit. Now, let's just say that for all kind of intensive purposes, where are we going? We'll use the old 50% rule for a target. Okay, there we go. So we use Fibonacci, but also no matter what, 50% of a move from high to low or low to high is typically an old trading average or adage objective price for corrections. Not that it stops on a dime there, but that's an area you look for it to go to. So if this market is going to break out to the upside, it doesn't have that much to go. If it went already from 47 to 50, that's a $3 move. The high today was at 53. So, and we know that if it takes out the high from today, which right now it looks like it may do over the next couple of weeks. I mean, this is a weekly chart here. We go back to the daily, and we're in a good situation. So there's a good chance that on a bullish perspective that you can pull a profit out before expiration, or even as going into expiration. I would say once you start to get, I wouldn't go all the way to that 50% level. I would say once you make, if you're up 100% to 1.5, I would say 1.5% on the trade, because you only have a few weeks and you're heading into holiday markets, take it off. That was the way I would manage it. Ironically, we've been doing these webinars. We started using this trading platform for our webinars at the beginning of the year, and our account value with all the expired spreads and straight out options, the account is positive with the winners and losers. So we didn't even manage those trades. We just gave examples of how, and obviously didn't have a further updated webinar to show you how they worked out. But in this case, for the toll, then I would look for that type of scenario and get out around that type of time frame. All right, we got Verizon, we got UP Railroad, please. Okay, so since we got the please, I always respect politeness. Okay, UP Wheels Up Experience. I wonder, is that the right one? It says it's UP. It says Wheels Up Experience. I don't know if that's the one you're looking at, but we'll look at the stock. All right, MACD right here is getting ready. It hasn't done so yet, but it's looking like it wants to cross and give us a buy signal. We are below the 250-day moving average. We've been trending lower, making lower move lows and lower move highs. It's a bear trend. So right now the question is, this is very low. Now, this is when it comes to price on a stock, and I think that this is the right stock because of the symbol. This value of stock, like there's people who think that, they only have money to trade cheap stocks. When they think of cheap stocks, they think of cheap price. A $9 stock may be cheap to a lot of people because it's not trading like Tesla prices. But that doesn't mean anything. A $9 stock could be totally overvalued, and a stock like Tesla, well, it was definitely way overvalued. Now I would say, is it undervalued? Probably not. I think it's coming back to reality. But that's the same thing. When you have, remember, the market there's all kinds of emotions going on, and there's all kinds of mechanics and fundamentals that drive the market up and down. And so for valuations, you want to be in like the NASDAQ stocks, the S&P stocks, Dow stocks, your major stocks. This one is below. This is it's an OTC kind of thing. I mean, it's only a 0.10. So I would say stay away from it, just period. I wouldn't even bother with it, especially at these levels. Is it cheap? Well, yeah, it's very low in price. I wouldn't necessarily say that it's cheap. And you have nothing but bearish until you have a very valid buy signal. I mean, the only thing I can say here is that this low has held from back in October. So, and I'm not saying that you shouldn't trade this stock or, you know, get out of it by any means. It's not my job. Except for if this low holds here, then you may be seeing the market turn. I mean, but the question is what kind of, I mean, it's such a level from $1 to $2. That's a big return. But once again, I don't know if you're going to be able to pull that off. You know, this low may hold here and you may take out this high here, but are you going to get above 187? I don't know. This one I would have to say stay away from, but you did say please. Let's look at Walmart. Oops, no, that's not the right one. We got it's Walmart. I can't even remember what Walmart is. Go to stocks. There we go. There we go. WMP, that's right. All right, now we got a stock that everybody's familiar with. Now, the one thing about Walmart, remember, this is a heavily traded stock. The options might be a little pricey, but sometimes not so bad. When it comes to something like Tesla or Amazon, I would be very careful with those. You need deep pockets, whether you're trading spreads or outright calls or puts. All right, so for our question here on Walmart stock, is this a buy? Is it a sell? What would we do here? Well, I'll tell you what, we have a gap here. All gaps typically get filled. It got down to, yeah, we haven't filled the gap yet. Okay, so right now the MACD has us, the market was oversold. We had a sell signal. The market is correcting. It looks like it's made a higher move high here. The question is it going to hold? So I would say this is your line in the sand. So for an option, if you go below here, you know this is a bad area. So I would say your strike price that we should use would be the 145. That puts us in the money. We could use maybe, or we could, I have to look at the chain once we get to it. We could use probably maybe a 147.50 or 147 also. But the reason I say this is your risk level. If we fall below here, so far you've been making higher move highs, higher move low, higher move high, higher move low. Now you're moving up again. The question is, are you going to continue to trend higher or is it going to fall off? If it falls off and all of a sudden makes lower move lows, well, then you're coming off a higher move high, higher move low, lower move high, and a lower move low. That means that you're already confirming that the short-term trend on the hourly and daily is bearish. So to answer your question, I'm looking at the stock. So to break it down, there is a put situation and a call situation. If you think that Walmart, I would think that their margins, I don't know how tight they are going into the holiday season. They probably are going to be booming because of inflation. People are going to are choosing different and less expensive options for Christmas gifts and things. And then there's also just their staples. People are choosing Walmart just because of the pricing for consumer staples and things like that. So if you are bullish on them, I would say the 145 is good. But as far as, is it bullish? I don't know. You've got this gap. I think you have a chance of correcting still a little bit further. And this is a good area here. Okay, so we have the 0.382. So yeah, right where this low is, that's a pretty significant area of support. If it falls below there, odds are it's coming back down to 140 to 137 area. So I'll just use the 140 and set this up for a trade here. Okay, so I'm indifferent on this one. Obviously, with the number, we're an hour into the trade, so the dollar's coming back a little bit. Yields are obviously a little bit higher because of the half-point announcement. Stock market's not doing very much. Obviously, Walmart's not doing very much. So let's take a look at the 145 option chain. So we go to the option chain tab on our trading platform. We put in wall. And then we go to January. And we want to have all, oops. Okay. And hang on one second. Regular, yeah. Oh, there we go. And oops, not March. January. What am I doing wrong here? All right, it's giving us that. Oh, duh, it's Walmart MT. My bad. Duh. Okay, all's good, all there. Expiration. We go to December 13th, just like the other. There we go. Look at that. Okay, Teddy, you're a genius. All right, 145. Let's see. So the market's at 147. Let's see what we got here. We got 145 and we got a 147 options. So the 147s, that's in the money. So let's see, on the calls, we got the 345, 245. Okay, so they're 147 looks like the strike price to work with. So we're going to move. So we know that here's where 145 is. We're going to put in the strike price here of 147, and then we're going to figure out what we're going to do for a trade. Okay. So we have our strike price identified. So now we're going to go to our trading tab, and now we're going to put in WMT. So that comes up Walmart. All right, there we go. All right, so now we don't know which direction this thing is going to go. I would say let's take a look and see what the straddle looks like. The call is going to be, let's see, we go to oops. Actually, I'm going to show you something. In case you enter it wrong, you should always double check. You got your options. We're going to buy to open, not sell to open. And then we got our quantities, and we're going to make sure that our strike prices are both the same. So we have a put, we have a call, we have buy to open on both, as you can see on the trading platform. Quantity is 1. And then we have the pricings here. Now this is December, so we have the wrong expiration, January 13th. All right. Oh, now we got to double check. Got to redo the strike price. Okay. But at least we got it right. Okay. So once again, we check buy to open for each position. Quantity is 1. The expiration is the same. Remember, you're buying the same expiration month and the same strike price for both the call and the put option. All right. So we have our pricing right there. We verify it here on our verification tab. We hit the trade. It's a $645 trade. We hit OK. And now we go to our account summary. So now so far we have our SPY spread that I put on before the market opened, or it's not before the market, before the webinar started, because we have the Fed trade, and I can see, wow, what an indifference thing. So the dollar got hit, and then now it went back up. It's basically gone nowhere. I can see that from how Walmart was trading. We have our other options, and now we have the Walmart spread. We put on a straddle. Remember, that's buying the same strike price, same month, put in the call, and we have this on our tab. So in this case, we knew it cost $640. So what are we looking for? How far does it have to go? So we know that we're at 147. So it's got to go to 153. We're just going to go to 45 here. So the break even, and then need to go to 143. And it's 143, 42, 70. Change this to 70. All right, so that's within a couple of price points, not going down to the exact dollar. So here's what we got to get down to. So let's get rid of these 2 yellow lines here. The market gets below here or above here before expiration, which is on January the 13th. We go to January 13th. You can see where this is. At any time if it comes down to these areas, before then, you will be in the money for sure, because you'll be right at the break-even point, but you'll have your volatility factor, your time value, which, remember, time won't be very much left on your options. So, but the spread will still have a chance to make a decent profit. And remember, we had our 50% level. If this market still remains bearish, we have this gap. And this is the key thing is, remember I told you when I started this Walmart example, all gaps get filled. It's not that they always all get filled, but that's an old trading adage that when the market has gaps, that they tend to make sure that they do get filled eventually. And right now, since we had been flirting with trying to fill it, this would be a good situation where the market breaks down, fills this gap. And I would say if the Walmart gets below 145, if you had the straddle on, that would be a good time to get out of it instead of waiting till expiration, because the overall market trend here is bullish. You don't know if it's a correction or not. Right now, it's an end of the year trade. A lot of things can happen too at the end of the year. So one of the stocking stuffer things you're supposed to take out of this webinar today is that one is some of the techniques that we've been going over here, but also how you manage things. I think we've shown that on different we had the spontaneous stock examples that we pulled up from the people who are watching. This is all stuff we're breaking down as the market is happening on a Fed day. That seems to be a pretty non-event day too, which is odd. But remember, we are in December, we're at quarter end, and you're going to see a lot of, I would say, window dressing, meaning that you have your fourth quarter coming to an end. Any mutual funds and stuff like that, they tend to clear off their balance sheet at the end of the quarter, and especially at year end, if they're on a good upslope right now, especially with the way the market is so jittery going into the next year, you're probably going to see a lot of profit taking going on in many stocks. And then also you may see a lot of buying from the public, depending on what their fears are or not fears. If they think that the Fed really is going to stop raising rates next year, then you may have a lot of people contributing back into their IRAs and 401s and stuff like that, because they think that there's more of a value in putting their money into the stock market versus, say, more conservative bond funds and things like that. Although if the Fed's going to stop raising rates, probably is the time to put some money back into bond funds, because bond funds have been getting crushed over the last 6 months because of the higher interest rate moves. And that's just a dynamic of bond pricing that has nothing to do with the markets in themselves. That's just a fundamental fact. So, and Walmart, as we are talking right now, is starting to lean a little bit lower. All right, we have time for another one. So let's see, we had Walmart, we had Chevron. Chevron's a good, oh wait, you know what? Let's jump to someone else here. We got Verizon. Let's go to, all right, Verizon Communication, VZ. Okay, Verizon. Now, you know what's kind of funny? Telecom stocks. It's amazing. These things are juggernauts, and they can be so resilient, and then they can just be the biggest dogs out there. Okay, so interestingly enough, we had a nice buy over. You can see how oversold this thing was for a very long time, from August all the way into basically middle of October. We set a nice low. We've been trending a little bit higher since then. Higher move highs, higher move lows. Is it a correction? This is very bearish. You're still below your 200 and your 50-day moving average. I would be reluctant to say that this is going to be overall holding its trend. It's very beaten up. I don't know enough about the fundamentals about this stock to put into it, but technically, the way you're looking at it right now, it's set up for neutral more than it is into a buy or maybe a buy dip situation. So with this one, I don't really have any recommendations on putting any type of options play on it, because you can see that just over the past, let's see, if we just go over the last 4 months, the overall range for this market here, we'll just go to there, is you're in an $8 range in a stock that, let's see. Okay, yeah, I mean, it's not that it trends that much, but you're at the bottom of this range here. It's been trending in a very strong bear market now since 2021. I wouldn't try and catch a falling knife here, but then I also I'm not saying it's not a good opportunity to buy it. Verizon, there's a lot of issues with telecom right now. You have all the wars with all these carriers that are coming out that are so much cheaper. And I think that that's going to Verizon's market share, just like T-Mobile and a lot of them, they're losing a lot of market share to some of these smaller brands, if you will. And I think you're gonna have to watch the holiday numbers, see what if they got a big Apple iPhone deal or something like that going on, because those things definitely help, you know. So Verizon, not so good on that one. We got time for one more before the webinar is over, or maybe two more. Let's see, we have Chevron. Oh, here we go. CTR. Can you please look at, okay, we got another please, so I have to do that one. All right. CTRA. Terra Energy. All right, this is for one of our viewers out there who really would like to get a little bit on this one. Okay, Terra, let's get got an EMA that got erased here. Moving average exponential. Okay, let's change this here to 50. Style the red. Input to 50. Sorry, accidentally hit the X on that. Okay. All right, so for our viewer here, we have Terra Energy, and let's look at it's at $25, it's right around the strike price. So let's go to the option chain, and we're gonna go to CTRA, and we're gonna go to, let's see, all expiration, January 13th. Actually, for you, because you've got a longer term play, I'm sure I'll go all the way out to the end of January. All right. There we go. CTR, yeah. Oh. Yeah. Oh, what am I doing here? CTRA. Why is it not giving us anything here? There's this. Okay, let's go to the trading thing. I don't know why it's not giving one there. CTRA. Okay, let's see if I add buy to open. Let me go to the end of January. What is it? 25? 25. No, we'll go with the 23. It's a 24.80. No, it's 24. Let's see what we get for a price here. Okay. All right. Well, the options are very affordable. Okay, so if you were bullish this stock for our listeners here, it would cost you $2,400 to put just a little over $2,400 to put the position on and get long. This market, it's obviously been trending very sideways for the last few months. Let me pull up the monthly. Oh, it's coming back. Oh, see, okay, so this has been trending lower for this amount of months, the big sell signal here. Very bearish. I think it's in a sell rally forecast right now for you. I don't know any of the fundamentals, so just on a technical basis. Yeah, the weekly is looking like it wants to kind of stabilize, maybe go a little sideways. There might be a little spike buy trade. Okay, so what the trend here is lower move lows and lower move highs. The indicators here are oversold. You're below the moving averages, and you're also starting to get a cross. Now, a lot of times people make the mistake that just because a moving average cross is one way it's a buy, one way it's a sell. They're lagging indicators. You don't do them at those moments. You use those as confirmation with other indicators and signals, whether it be buy or sell, and depending on which direction you're looking at. But right now, all of the technicals are very bearish. It's also oversold. But I wouldn't try and catch a falling knife on this one, but it looks like you really want to know about that. So, but for Terra, I would say, let's look at the weekly once again. You do have you have decent volatility. On most weeks, it looks like you have a range of $4 or so. That being the case, I would say, you don't really there's two ways you could do this, and I think the smartest way would be to start out with a straddle. If it goes to the downside and you think you're coming into where it's finally going to be a buy, get out of the put and then see if you can ride the call back if in case there's enough time. That probably won't happen, but I think you're going to still have a good chance on the sell side. If this market snaps to the upside, that's where you might have even more potential. So But once again, it's a bearish, it's in a bearish way right now. You took out this low here, it's riding this. Well, let's see. If we go back to here, although you are right in this 50% to 6.18. Okay, so here we go. We do have, I guess it's a decent buy signal here. So for CTRA, but here's what you have to be mindful of. If you're looking as an option play, I think it's a low risk buying situation. As a stock play, it's a very high risk buying situation right now. There's no buy signal. It's just because something is oversold, it can be oversold for another few months, and it doesn't mean that it's going to turn around. Once again, I'm only looking at technically. I don't know the fundamentals, if there's issues with the company or other types of numbers like that. But for an option play, I would say absolutely for CTRA. Buy to open, one call with a January 27th expiration with 24 strike price, which is just about below where the market's trading at right now. This would be a low risk buying area for a call, especially if you're looking at the time frame. Okay, January 27th, you have a month and a half to be long this market for $200 versus $2,500 almost, and take advantage of that. So for that trade was pretty nominal. We go back to our account summary. We can see that we have the excuse me, CTRA now is here. We are long one, and okay, market value is 375, so 192. So yeah, so for 24, and just to give you an idea of where to get out on this minimally, or where your break even would be, we know that you need to have a move of at least $2. We're just going to say 3, because you still have a lot of time. So we're at $24 was the strike price. So we go to 27 right here. Now, irony of that falls right on the 0.618. So if this market's bearish and you're going to see a correction like you saw here, and if you look at this went from 25 to 28, there's at least $3 right there. So from 24 to 27, that's for 24.80 to 27.80 is $3. You'd have a symmetrical correction. If it gets up to there, should you take this kind of a trade, or even if you're long the stock wondering when I should get out, I would look to start to worry if the market, if you think the stock is still a dog or is not in a lot of trouble still, this would be an area where you probably want to start to look to take your profits out or cut your losses. Or like I said, in this situation, that's why options are great. For the $200 versus 2,400, you got a good chance at catching this correction, and you're going to make 100% return on your money within a period of a month of 5 weeks, or within 5 weeks. You have that potential should the market go up to that area and correct to that. And if you think about how long it would take, this situation here from low to high took us what, 1, 2, 3, 4, 5, 6 sessions to come down to this one here. You know, it took us what, 1, 2, 3, 4, 5, 6, 7, 8. You're talking about a period of a week and a half. You have 5.5 weeks for it to manifest itself. So if the market as the holidays starts to hold up here, and it may, and as the markets get quiet over the holidays, and all of a sudden you get all your New Year's buying and shabam, catch a rally. So hopefully that was informative and helpful for you guys. And now I am going to turn things back over to Gina.
Okay, great. Well, thank you so much, Teddy. That was very interesting and informative. And that's great. You were able to go through our viewers' stock picks and go over strategies. So thank you so much. And thank you to all of our attendees for taking the time out of your busy day to join us. Teddy was using eOptions paper trading account to do his trades at the webinar today. So if you are interested, that is free to sign up. It takes just a minute. You can go to eoption.com, and there is a blue button at the top of the screen. It says demo account. You just click on that and enter your name and email address, and you can start getting it into our trading platform and check that out, how to enter trades. We also have lots of tremendous resources on there. We have free research, tools, breaking news. So feel free to go in and check that out. And that is absolutely free. Also, if you do have more questions, I know Teddy was great and answered a lot of your questions related to specific stocks, looking at option strategies. But if you have more questions, We're here for you at eOption. Feel free to give us a call at any time. You can call our trade desk and they're happy to answer your questions. You can also email us at support@eoption.com and we're happy to help you on anything that you'd like to know. And just quickly to go on the screen, you'll see some of the benefits of eOption if you are interested in opening an account. It's just zero for unlimited stock and ETF trades, and options are just 10 cents per contract plus $1.99 per option trade. So it's one of the lowest in the country. And as you saw, we do have a pretty powerful and easy to use trading platform. And we do offer over $500 in free trading tools and research annually. So we do have some wonderful tools. So we hope you'll look at our website a little closer and take a look at that. And we also have on our website, if you want to know about a strategy that was mentioned on this webinar, such as a straddle or a strangle, you can go into our website. We have a strategy page and click on the straddle and it'll go through analysis, when you would use it, a video, how to use it. So there's a lot of wonderful resources on our website. We hope that you will check it out. And our parent company, Regal Securities, we've been servicing investors for 45 years. So we have been around for a while and we're always here to help and service our customers. And then finally, we just want to thank you for coming today and happy holidays. And again, we hope you'll subscribe to our YouTube channel so you don't miss any of our videos. We try to post them within 24 to 48 hours after they occur. So if you subscribe, you will be notified of any new videos. And also when we post this one, we will have a special bonus giving out some free stock if you open an account. It'll be for a short time. So you want to go in the next few days and check it out if you are interested. And there it is on the screen. You can go to youtube.com/eoption and just click on the subscribe. And you can subscribe to our YouTube channel then. So thank you again for your time. We greatly appreciate it. Again, this is our last webinar for the year, but we are looking forward to having a full calendar in 2023. So be on the lookout for our schedule in January. And thank you again and happy holidays. Bye now.